Okay, the industry we decided to choose was pharmaceutical biotechnology. It has a lot of defensive stocks, which are stocks that stay strong during when the economy is not doing so well. Changing some government policies, increase investments in cancer and stem cell research. There's some recent acquisitions within our industries. Genentech was bought out by Roche. Pfizer bought out Wyeth, and Gilead just bought a company which was CV Therapeutics. One of the reasons we chose this company or this industry was because the baby boomers are now growing older and are in need of healthcare. And the way we analyzed our companies were external analysis, internal analysis, and cash, and that's how we're going to go through it in our presentation.
Alright, so the first metric we looked at compared a year-to-year basis, and it was the volume growth value we all did in step 1. And you can see here, Gilead has large growth potential, and it had 25% growth in net income and sales. And it's not the leader in these categories. We actually had a different leader in step 1, but as you will see later, it really proved itself in later categories. It was still solid here, and it has a large market share, giving it lots of money for advertising, research and development, and the power to buy out other companies.
The next step is value, and value is determined basically by the PE ratios, which is basically the price paid per share in relation to the profit earned by the company. The higher the PE ratio, the riskier the stock is, because it signifies high expectations and higher payout. Gilead's PE ratio is relatively low for its industry, and since it has a steady growth, it indicates a good investment.
So now we're going to look at some of the internal metrics, which we analyze using the return on equity, using the DuPont analysis. The DuPont analysis, as you all know, looks at the causal factors of return on equity, including the profitability, the efficiency, and leverage, which basically tells us how good the company is being managed. So when we looked at the metrics, you can see Gilead came up, well, they had the highest ROE of the group, and they also had the highest profitability and efficiency, which both showed that the company was very well managed. Their leverage wasn't the highest amongst the companies we analyzed, but it was just a little, it was at around 165%, which is very good. So they earned their high ROE markings through their exceptional management. But as when we look at the external and internal metrics, those metrics are subject to accounting fallacies, I guess, or tricks, and so there's one thing that we can look at that doesn't really lie, and that's the cash. So.
Okay. Cash flow is measured the amount of cash generated from core activities in the business. This is a check to net income to make sure the company is actually generating cash and not padding the net income. Gilead cash flow from operating activities is $2.2 billion, which is very large, and it is larger than net income, so it's believable. Since they have such a large cash from operating activities, they have so much money to now invest and do other things within the company to make them stronger. They have a very small capital expenditure to pay, which doesn't hurt their net income loss. So that means they have all this money to buy back stock, which they bought back $1.7 billion worth of stock and paid off just a little bit of debt. And they ended up with $491 million left over to give to the owners and to put back into the company to make them stronger for years to come.
Oh, are we not going?
You know,
Okay. And in conclusion, I'm going to talk about some general concepts and in relationship to demographics. Between now and 2050, the world's population predicted to be increased by 3.5 billion. The population in the U.S. of people over age 65 by 2030 will be at 65 million, and the population increase in China will go from its current 88 million people over age 65 to 350 million people by 2030. These demographic shifts are going to put pressure on and expectations on biotechnology to come up with end results of longer life and higher quality of life. Biotechnology is in its formative stage. It has a huge growth potential ahead of it. And out of our analysis, we've decided on Gilead as our #1 pick. Gilead is a company with a diverse product line, everything from the treatment of HIV and AIDS to hepatitis B. There are cardiovascular treatments as well as vaccines such as Tamiflu, which has recently been in the news related to swine flu. So there's a lot of products that are needed, necessary, and a demographic that would support that. Last year, the sales of those products increased by 36%. Their net income, earnings per share, revenue all increased by 25%. As far as Gilead's management has utilized their substantial free cash flow to enable them to, in March of 2009, purchase CV Pharmaceuticals. I'm lacking the name there. It's another biotech, and that free cash flow accumulated the cash necessary for that purchase in 2009. Superior management is also demonstrated in the relationship between the assets, debt, and the profit margins, which created that return on equity that was so phenomenal at 48%. During the same period that we've been discussing in 2008, the share price of Gilead has declined by 20%. So that disconnect between a share price decelerating and earnings rising is where value is found. And so we attribute this decline in the share price to be systemic to or attached to the decline in the overall market, not indicative of Gilead's as a quality company. So overall, we view Gilead as an undervalued company and an excellent investment. And we're open for questions at this point.
So what's the company trading at right now?
It's in the 30s.
The 30s, and how does it compare to the last year, since you said it was actually...
Well, 20%. And I was talking fiscal year declines, so we have seen a rebound. Even at this point, we're still at a 15% discount to what it was at 12/31/07. So it was in the mid-50s at that point. What other questions are there?
What happened to Life Tech in the second life? After the second life?
Life Technologies had gone through a recent merger and acquisition, and all of their numbers were pretty screwy because of that. They were really highly leveraged, and because we were looking at a merged company, not just a single company anymore. All of their profits were not very good, just generally speaking. Although their cash flows didn't look bad, all the other metrics we looked at, they were just way off the chart bad.